Hello and welcome from lockdown London. I'm Charlie Gibson, the head of mining research at Edison Investment Research. Now, you will have almost certainly noticed quite a lot of volatility in the markets recently. It used to be that markets moving 2%, that was a colossal move, and now it seems that they move 2% almost on a daily basis. It can either be up 2% or down 2%, but it's happening a lot at the moment. And with all that volatility going around, it's not surprising that investors are looking for a safe haven. It's not surprising that gold has been in the middle of all that. But what I want to do is just try and quantify an analysis that I've done in the past. We all know that gold is a safe haven. We all know that, well, there's a coronavirus, of course there is at the moment. There's also rising tensions once again between the US and China, and also it seems between the two Koreas as well. So it's been a long time since gold has been in this much in the middle of the focus of investing sentiment, but it is very much at the moment. And as I say, I want to put a bit of some numbers to that, but let's just go back a couple of years to November 2017, and the Federal Reserve say that they want to reduce their balance sheet by $1.5 trillion US dollars. And if that goes to plan, what that means is the total US monetary base will probably reduce from about 3.7 to about 2.2 trillion US dollars. Why is that important? Because there has historically been an extremely close, since 1967, there has been a correlation of 0.909 between the gold price and the US monetary base. And so what I want to say, to show is that what that means for the gold price if the total monetary base moves as we expect with these sort of moves in the Federal Reserve's balance sheet. Now, we went back to July last year, the balance sheet is standing at 3.24 trillion US dollars. Now, on the correlation, that would imply a gold price of $1,284 an ounce. And with a bit of speculation and a bit of a following wind behind that, it could be 1,525. But as you remember, this time last year, the Fed was changing its tune quite significantly from reducing the balance sheet to, oh, suddenly we're not going to reduce it anymore. We're going to let mortgage-backed securities roll off, but we're going to reinvest them in treasuries. There's a lot of volatility in overnight interest rates, and the Fed says we're going to start, and they don't call it QE or anything like that, but they're going to start bond buying again, to the tune of 60 billion US dollars a month. And that's a big number because during quantitative easing, it was about 85 billion. And during the contraction period, it was about 50 billion. So buying once again at the rate of 60 billion US dollars a month, these are big numbers. And it's in no uncertain terms a re-expansion of both the Fed's balance sheet and also the total US monetary base. So if we look at the end of last year, where the monetary base is, that would imply a gold price of 1,344, or with the following wind, 1,606. We've got 3 more months, January, February, and March, where the Fed is continuing to buy bonds at that rate. But then, of course, we know we've got the coronavirus, and the Fed, as part of the stimulus package, says we're going to buy another 700 billion of assets. Not only bonds, but also and mortgage-backed securities, but also agency mortgage-backed securities as well. It's all on the total monetary base there. Now, with that extra 700 million, we would expect the total US monetary base to go to a record 4,250, that sort of order of magnitude. If it does, gold is suddenly underpinned at 1,620, and with a following wind, with a bit of speculation, way over 2,000, maybe 2,600, that as high as that. But this is the real. We know that on March the 23rd, the Fed made that open-ended, and they said they would buy as much as was necessary. Now, anecdotally, it looks like they could have bought almost 2 trillions worth of bonds already, 1,220, since they put the stimulus package in place since mid-March. Now, that could take the monetary base to about 5.5 trillion US dollars, at least at the end of 2020. That would imply that the gold is underpinned at 2,000, and well, with the following wind, maybe we're looking at 3,000. Those are the figures I wanted to put on it for you. This is me, Charlie Gibson, signing off for the Investing Channel, hoping to give you more such ideas in the very near future. But until then, you have a capital day.